Hello everyone, welcome to ACCA P6 UK lectures. We are still at property income. In the previous lecture we have seen a past paper as well with regards to property income, and now we will look at some other bits and pieces which are left within the property income. Now this stuff is already given to you in the lecture notes. Always write down whatever I have listed on the board. Always write down on the piece of paper on your notes which you're making in your notebook, so it will help you in your revision. So the same stuff is already given in the notes, but you must also write down on your notebooks as well. Right, so other stuff which is remaining in the lecture notes is this. First of all, premium on leases. As I said when we started the property income, that whenever we let our property to someone or whenever we want some property, we pay the rent on that, but also because the property is located in some special area, we have to pay the premium as well. Now premium will be £20,000, £40,000, it depends on the location of the property and how many people want that property. So obviously the more people want that property, the landlord will say I want more premium. But the premium, say for example it is £20,000, we for tax purposes we will not take £20,000. There is a certain way to calculate the premium for tax purposes. So how to calculate the premiums? We will take the premium amount, whatever we have paid or whatever we have received as a landlord, because we are looking from the landlord point of view. We are a taxpayer, we are looking at property income, so we will consider it from the landlord point of view. So we are landlords, so we have received the premium excuse me, so we'll take the premium, and out of that we'll deduct the premium multiplied by n minus 1 into 2%. N here means number of years for which the lease is granted. If the agreement of the lease is say for example 50 years, we'll write down 50 minus 1. Alright, so it can be up to maximum of 50 years. So likewise, if it is for 10 years, 10 minus 1 into 2%. So we'll deduct this amount out of that. The remaining amount, whatever it is, that will be considered as premium while calculating the property income. Right, so that's how we calculate the premium on leases. Now after that, the rental income. Now rental income could be earned in ways as well, one of which is when we have extra room in our main residence. Say for example if I have a big house and out of within that house I have one separate room which is available for rent, which I'm not using, so I thought why not earn some money out of that. So I've advertised and said if someone is interested in living in that house, living in that room, I can let that room. Alright, so if I have an extra room in my main residence, I want to earn some money on that, so I can let that to the tenants and I can earn the money. Now when I am earning the income, of course I will have to pay the tax on that. Now rent to room relief is a way to calculate the tax. So whenever you have let the room to some tenants, for tax purposes, this calculation can be done in two different ways. One is the ordinary way, another one is the rent room relief, for which we are studying. Now ordinary way simply means that we will take the rental amount and we will deduct any expenses if we have incurred on that room, on that specific room. Alright, so that is basically ordinary ways. That's why I have listed down rent, and we will deduct the expenses. Now these expenses and rent will be on accruals basis, and so that was ordinary way. Now if you look at the rent a room relief way, we cannot deduct the expenses under the rent a room relief. We can only deduct the exemption, which is £7,500. Alright, so ordinary way is a simple way. So we'll take the income, rental income, and we will deduct the expenses out of that. So that is ordinary way. And rent room relief way is that we'll take the rent, we cannot deduct the expenses, however we can deduct the exemption of £7,500. Now if that house is jointly owned, then this will be half of it. So if that house is jointly owned and the room of course will be jointly owned as well, then this will be divided by 2, so 7,500 divided by 2, so that will be deducted out of that. Alright, so these are two different ways to calculate the property income when we are letting a room. Now you might be thinking that which one is better, which one shall we opt, and is there any instructions by HM Revenue and Custom that which one shall we apply? HMRC does not specify which one you should use. HMRC just says whichever you want to choose. So of course, from our point of view as a taxpayer, we would want to choose which results in less tax liability. So we will calculate the rental room relief, we will calculate the rental income of the room from both ways, rental room relief and the ordinary way, and whichever results in the less tax liabilities, we will choose that one, and we will then pay according to that tax liability. All right, so that is rent a room relief. Another topic within this same chapter is real estate investment trusts. Now these are basically trusts which invest in the real investments, and we then invest in this trust. So we are investing in this trust, we have bought some shares within that trust, and that trust is eventually investing in the real estate, property and stuff. Right? Now when we have invested in that real estate investment trust, of course they are going to give us the dividends. Now these dividends are not the normal dividends which we put under the dividend column while making the income tax pro forma. These are basically the property income. HM Revenue and Custom says this is property income. So whenever you receive dividend from the real estate investment trust, it will not be considered dividend, it will be considered property income. So accordingly it will go into the non-savings column. Alright, so that is a real estate investment trust. And another thing is that it is received net of 20% tax. So 20% tax has already been deducted, and what we need to do is we need to put the gross amount into the income tax pro forma, and then 20% will be deducted at source at the end of the the income tax pro forma. All right, so that is a real estate investment trust. Our last topic is furnished holiday letting. Now we have seen furnished holiday letting when we were studying the pension. You remember contribution qualifying for tax relief was higher of two things: relevant earnings and £3,600. Now within that relevant earnings there were different things, and one of which was furnished holiday letting. Alright, now if we look at the tax benefits of furnished holiday letting, it tells that it is part of the relevant earnings for pension purposes. Alright, now if you go back to the pension chapter and see the relevant earnings bit, it will tell you that the furnished holiday letting, so income from the furnished holiday letting, will be considered relevant earnings for pension relief purposes. Alright, by the way, what is the furnished holiday letting? Now if you have the property within the European Union, European Economic Area basically, and if you furnish that property and let to the tenants, then that will be considered furnished holiday letting. Alright, so there are certain conditions to meet because it is a holiday letting, so of course the property must be furnished, and it must be let to the tenants for profit making purposes, but it must be on the holiday spot as well, like say for example somewhere in Scotland or somewhere in Weymouth or somewhere at the holiday spot, so where the people come on holiday and spend a few days there and then go on. Alright, and then they leave that property. So it is a furnished holiday letting. Now what are the conditions? Conditions for letting to qualify as furnished holiday letting. So if you have a say for example property in central London, that will not qualify as furnished holiday letting because it is not on the holiday spot. So anyway, what are the conditions for letting to qualify as furnished holiday letting? So these are the conditions, and please remember all of these conditions must be met in order for it to be considered as furnished holiday letting. All of the conditions must satisfy. So first one is furnished accommodation on commercial basis. It must be a furnished accommodation. So letting must be a furnished accommodation, and which will be on the commercial basis for profit making purposes. So the second condition is it must be available for letting to the general public for at least 210 days within the tax year. So it must be available for rent for 210 days. Now it says available for letting. So it must be available for letting. It is not saying you must actually let. It is saying available for letting. So it must be available for letting to general public for at least 210 days in the tax year. And the next condition says must actually be let. So that is the difference between the earlier one and this one. In the earlier one it said 210 days, but this is a period for which it must be available for letting. The next one says that it must actually be let for how many days? Half of 210 days. Half of 210 days, how many days? 105 days. All right, so it must be available for letting for 210 days, but it must be let for half of those days, which is 105 days during the tax year. And then it says that must not be let to the same person, so it must not be in the same occupation for more than 31 days in the tax year. So you cannot let the same property to the same person for 31 days within the tax year. All right. Now, if you do so, if you have given the property, if you have let the property to the same person for 31 days within the tax year, then maximum you can do so is to 5 people. And altogether, if we give, say for example, the same property for 31 days to the 5 people, so 31 multiplied by 5 is equal to 155 days. So it says the total must not be total must be less than 155 days if it is in the longer term occupation. All right. Now this 31 days means the longer term occupation. Longer term occupation means that same person must not stay within the property for more than 31 days. But if you do so, if you have given the property, say for example, because of some emergency or whatever, you have given the property to the same person for 31 days, that's fine. 35 days or 40 days. The second person was facing some other issues and he had to stay for more than 31 days as well. That's fine. So likewise, if the people are coming and staying for more than 31 days, total must not be 155 days. So it must be less than 155 days if it is in the longer term occupation. And longer term occupation means 31 days. All right. So again, must not be let to the same person for more than 31 days in the tax year. If, however, total days must be less than 155 days in the longer term occupation. And that's why I've put the arrow in it. The 31 days means longer term occupation. All right. So total must be less than 155 days. Now, say for example, if the total is becoming more than 155 days, then this property is not furnished holiday letting. All right. All of these conditions must be satisfied in order for it to be considered as furnished holiday letting. So these are the conditions. If the examiner asks you in the exam paper that, say for example, Mr. A does not know, he has a property but he does not know what are the conditions for it to be considered as furnished holiday letting, please tell him the conditions for the furnished holiday letting. You have to write down all of these conditions. All right. Now I've just made a small summary on it. So furnished accommodation on commercial basis, just to make it easier for you to memorize. But it is given in a good sentence structure style in the lecture notes, so you must write down in that way in the exam paper. So whatever I'm writing down on the whiteboard, it is the same stuff which you can find in the notes, but I have made a short summary here. You must not write in this way, you must write in the way it is given in the lecture notes, all right, in order for you to score good marks. These are just, these are the easier words or easier style for you to memorize, all right? Anyway, so these are the conditions for letting to qualify as furnished holiday letting. So if our property is qualified as furnished holiday letting, if I have fulfilled all of these criteria, what are the benefits for me to have a furnished holiday letting? So these are the benefits. Now if the examiner says, tell me the benefits of furnished holiday letting, then you must tell them all of these benefits. Furnished holiday letting losses, if you have any losses from the furnished holiday letting, they will be set off against the furnished holiday profits in the future years. All right, so that is one benefit. Then it says it's part of the relevant earnings for pension purposes, as I explained you earlier, that for pension relief purposes, the contribution qualifying for tax relief is higher of £3,600 than the relevant earnings. And within that relevant earnings, one of the earning was furnished holiday letting. Relevant earnings does not mean all of the earnings. There are certain sources of income, one of which is furnished holiday letting. If you're confused about this relevant earnings stuff, just go back to pension chapter and you will find this relevant earning there. All right. And then it says CGT, it is basically capital gains tax. We will see later when we move to capital gains tax, then you will understand it in a better way. capital gains tax deferral relief. Deferral relief simply means that you will not have to pay tax now, you might have to pay in the future. You are just deferring your capital gains tax liability. So capital gains tax deferral relief is available for furnished holiday letting. And the final, it says capital allowances are available. You haven't seen the capital allowances yet, but we will see in a couple of lectures time. So capital allowance basically simply means depreciation for tax purposes. So capital allowance is available for furnished holiday letting. All right. Now, if you the same stuff as I said earlier as well, that the same stuff is given to you in the lecture notes. So if you move to the lecture notes, just give me 1 second. Let me grab my iPad so we can see it from the iPad as well. The same stuff you can find in the lecture notes. So just if we move to in the meantime, if you want to note down this stuff which I've listed on the board, you can do so while I open the notes. So if you move to chapter number 3, please. Chapter number 3 of P6 notes. We have done half of the chapter already. Now we will do the remaining. We have actually done, we will just read through. So if you come to page number 11, it tells us the premium on leases, and the same stuff is given, as I said, in the notes as well, and it is explained with the help of an example. So if the lease is for £20,000, so premium is £20,000, and the lease is for 20 years, then how it is calculated, it is given in the notes. Then after that it says rent a room relief. It can be calculated in 2 different ways. One is the ordinary way, and the alternative way is rent a room relief. And just beneath that it says that you can choose whichever you want. So calculate the taxable. So whichever way you want to choose, you must tell HMRC within the 22 months after the end of the tax year. All right. And after that is rent a room relief. The same stuff is given, and there is example given just beneath that. What is the taxable property income for Alex for tax year 17-18? So you will have to calculate in both ways, ordinary way and rent a room relief. Whichever results in lower taxable property income, we will choose that option. Right, after that it says real estate investment trust. It is exactly the same thing which we have seen. And then it says the furnished holiday letting. Right, just in the furnished holiday letting, it's when looking at the benefits, it says that capital allowances will be available on furniture instead of the 10% replacement of domestic item relief. So the replacement of domestic items relief is simply replacement of furniture relief. So it says 10%. Just delete this 10%, please. There's no 10%. Replacement of furniture relief will be available on all of it. Like this, I said capital allowances will be available. So capital allowances on the furniture of the furniture letting will be available on all of it, not on the 10%, please. So just delete this 10%. Right, then that's it. We have finished our chapter number 3, and we will see the employment income when we meet next in our next video. So I have a homework for you. I have a small test for you. So we have finished our 3 chapters, as you know. Now, whatever we have studied within them 3 chapters, you have to revise them 3 chapters. And after you have after you think you have you have done the revision, and now you're confident on them 3 chapters, you know the lecture notes on your fingertips, you know everything of it, then go on and do question number 1 of the BPP exam kit, please. It's the Bale family. Bale family. Let me just check on the BPP exam kit if it is. Just wait 1 second. Yeah, question name is Bale family. So question number 1 of the BPP exam kit Bale family, you must do this question. So there are 1, 2, 3, there are 4 parts to this question. Do them 4 parts as well, A, B, C and D. And in part E, I want you to do another thing as well in part E. Bale family has a property and they think that it is furnished holiday letting, but they are not sure about it. So tell them the conditions for letting to qualify as furnished holiday letting. Also tell them the tax benefits of furnished holiday letting. Alright, so Bale family has a property which they think is furnished holiday letting, but they are not sure. Please tell them what are the conditions for a property to qualify as furnished holiday letting, and tell them the tax benefits if all of the conditions are met. Alright, so you must tell them the conditions of the furnished holiday letting, and you must also tell them the benefits, tax benefits of the furnished holiday letting. Both of them are given in the lecture notes, but the short summary is provided here as well. Alright, so revise 3 chapters. After that, do question number 1, Bale family. There are 4 options, 4 requirements, A, B, C and D, and I have given you additional requirement E as well, in which Bale family has a property and they are not sure if it is FHL or not. Tell them the conditions for a property to fulfill before it is qualified as furnished holiday letting, and also tell them the tax benefits of a property being classified as FHL.